Hey, it's Tom here and welcome back to the channel. Now, one of the hottest topics in the investing world over the last really year to 18 months has been inflation. We saw initially in sort of the crash in 2020, we actually saw a small amount of deflation in a lot of countries, but we've really kind of rocketed back up from that to see some of the highest inflation numbers that have frankly been seen in decades. And there's a lot of concern among investors around how we should be potentially positioning our portfolios in order to account for that. Should we have hedges on? Should we be investing in different types of companies? Should we be looking at commodities? There's kind of a whole bunch of different competing ideas on how exactly to approach this. And the reason I've been kind of thinking through this recently is I'm actually having a couple of returning podcast guests coming on this week, being Mitch and Cass Dole, who are a couple who are full-time investors over in Australia. So keep an eye out for that podcast episode. But in this particular video, I wanted to basically go back and look at some of the things that Warren Buffett has said on inflation and how to protect yourself from inflation as an investor. So that is the topic for today's video, but before we get into that, we do have a sponsor, and today's sponsor is ShareSite. ShareSite is the application that I personally use to basically track the returns in my portfolio. For any investor, really, tracking returns can get kind of complicated. You have obviously capital gains or losses. You also have dividend income. And if you happen to be someone who invests outside of your home country, like me, I've been here in New Zealand and investing quite a bit in the United States, we also are exposed to currency fluctuations, whether those are gains or losses. And ShareSite basically puts all of those different sources of return in a really easy to understand format, and it automatically pulls through all of the trades that I make from my brokers. So there's really not a lot of manual entry to do here. It kind of just pulls all the info together and allows me to see how my portfolio is performing. And you may also recognize ShareSite from another series that I do on the channel, which is the Shameless Cloner Portfolio. ShareSite is the tool that I'm using to track the performance of that particular portfolio. I'll put the returns up on the screen here if you're interested, just to kind of see how that portfolio is going. It's had a pretty rough start, but it's a long-term project, So you'll see that ShareSite gives us the capital gains, dividend income, and currency fluctuations. If you're interested in checking out ShareSite, you'll need to go to the link sharesite.com/investingwithtom. If you go to that link, there is a free version you can use through that link, but if you end up going for one of the premium subscription options, that will get you 4 months free off of an annual subscription. Okay, so in terms of Warren Buffett's commentary on inflation and how he thinks investors should basically kind of mentally process this and position themselves in their portfolios, I'm going to refer to a CNBC article that was written in July this year. So the article is called "The Two Things Warren Buffett Calls the Best Protection Against Inflation." And if we scroll through to kind of the core of this entire article, which I will leave a link down in the description if you want to check it out, there are really like the title suggests, kind of two things that Warren Buffett says. So let's start off with the first one. The first one is really not investing related. It's actually more kind of personal finance or career related, I would say. So the first thing he says is, if you're the best teacher, if you're the best surgeon, if you're the best lawyer, you will get your share of the national economic pie, regardless of the value of whatever the currency may be. Ultimately, the best thing to do is invest in yourself. And some of that to me, frankly, sounds a little cheesy, but I certainly see where Buffett is coming from. Anytime you have kind of skills and or products or services that are in demand, which we'll get to more when we talk about the investing and business approach, really regardless of what inflation does, or even what the currencies are that you're kind of exchanging, you are always going to be in demand, and you're always going to kind of get your share of the national economic pie, as Buffett describes it. So if you happen to be a doctor or a surgeon, as Buffett says here, it really doesn't matter what inflation does at all. Like, if people need a life-saving surgery, life-saving procedure, they're going to be willing to obviously pay up for that, or else they're dead, right? So that really does offer a lot of protection against inflation, which probably doesn't exist if you're more of a lower skilled or unskilled worker in some sort of minimum wage job. And hopefully this is kind of something that people are already aspiring to, not necessarily to be doctors or lawyers or surgeons, but hopefully kind of moving up the chain and becoming, a more skilled worker who demands, a higher value in the workplace over time. And I've even seen that over the last couple of years here on YouTube. As a creator here on YouTube, someone who puts out videos and largely gets paid by ad revenue on the YouTube videos. Obviously, we have channel sponsors as well, like we did for the start of this video. But a lot of the income basically is from the number of views I get, which, is directly correlated with the number of ads YouTube are able to put in front of people, kind of multiplied by the rates that, Google and YouTube charge those ads out to advertisers. So I've really seen that over time in this particular kind of niche on YouTube. The finance space has much higher ad rates than, the traditional, basically any other niche I've ever seen on YouTube, frankly. So, if you're someone that makes prank videos, or if you're someone even who is a musician or something, typically you may attract a lot more views potentially. I mean, finance is a relatively niche space, although it is growing, but you're getting much lower ad rates per view. You don't have as much of that pricing power, and you're not quite as high a demand, I guess, for advertisers compared to people in the finance space. So although I don't set those ad rates, I don't negotiate with Google or negotiate directly with advertisers or anything like that. Having an audience, you guys, which are valued clearly to advertisers, has meant that I've been able to get a larger share of the pie personally, and same with Google as well. They're taking their share as well. I've been able to get a larger share of the pie than I would be able to otherwise if I had, a similar size channel on a different niche. And whether inflation is 2% or 5% or 10% or 20%, really that's likely to hold true. We might have short-term dislocations in the economy. Ad rates here on YouTube really crashed down quite significantly in sort of March, April last year. With everything that was going on, advertising budgets, I presume for a lot of companies, were one of the first things to be kind of dialed back. But now that we're back to normal times, we're seeing some of the highest ad rates here on YouTube that I have frankly ever seen. Part of that in December here is probably to do with like the lead up to Christmas, but if I go back to March or April last year, I think the CPM that I was getting on the channel was somewhere in the $18 to $20 range. I think it kind of bottomed out at. So that's basically the amount that advertisers pay per 1,000 views here on YouTube. I get 55% of that as a creator, and YouTube takes 45% of that as kind of the platform provider for us to be able to do this. And if we fast forward to December, I think the current CPM so far for the month is $40, 40 New Zealand dollars, which part of that probably has to do with the lead up to Christmas, but part of it is, people just willing to pay higher ad rates in general and having greater advertising budgets versus what they did back last year. Okay, and second, in terms of inflation protection from the man himself, Warren Buffett here. So he says, the next best action to protect against inflation, Buffett says, is to own part of a wonderful business. That's because no matter what happens to the value of the dollar, the business's product will still be in demand. He uses one of his own investments as an example, and this is a quote from Buffett. He says, if you own the Coca-Cola company, you will get a given portion of people's labor 20 years from now and 50 years from now for your product, and it doesn't make any difference what's happened to the price level. And I would say that applies to many of the other businesses in Warren Buffett's portfolio as well. If we look at his largest investment being Apple, I think Apple has clearly demonstrated that they have pricing power over a typical phone, just like Coca-Cola has pricing power over Joe's Cola, or maybe even Pepsi and other competitors. We've seen that, Geico is sort of the low-cost provider of car insurance, which is one of Berkshire's big insurance businesses. And, that's a long-term kind of structural advantage that Geico has. And you kind of see that flow through almost every business that Warren Buffett owns. He has Berkshire Hathaway being a large utility business. People are still going to need power and so on, regardless of what inflation does. So there's protection there. You have See's Candy, which sells, premium priced kind of chocolates and candy products, and they're going to have pricing power, again, regardless of what inflation does. And you can see that as Buffett has kind of acquired businesses either entirely under the Berkshire Hathaway banner, or whether he's made investments in Berkshire's stock portfolio, there's really a common theme through almost every business that they do have some sort of pricing power. And I think there's an important distinction here because a lot of investors, when they're sort of searching for a vehicle for inflation protection, will go to something like commodities. Maybe they end up buying gold or a gold miner even, or they go to some other type of commodity producer. But I think over time, those have proven to be quite expensive from an opportunity cost standpoint, at least, quite expensive things to do. On average, a gold miner has a much lower return on capital than a great business like an Apple or a Coca-Cola. And sure, there'll be short periods of time where, there's fears of inflation and gold prices shoot up and the business does really well. There'll be short periods of time when that works, but if you intend to own a business for 5, 10, 20, 30, 50 years, like Buffett described with Coca-Cola here, I don't see the, commodity type business, gold miners and the like, really being the best place to kind of keep money longer term. And if you want to try and trade in and out between a gold miner and between a great business, that's a game that you can play, sure, but I think it's really tricky to kind of get the timing right. And anytime you're in, these lower quality businesses, often time is really not on your side. But when you're in sort of greater businesses, the surprises that you get from news and business updates and so on tend to be more positive. You tend to get good surprises out of a business like Apple or Coca-Cola, whereas you tend to often get, if you do get some sort of surprise in a unexpected press release or earnings update or something from a commodity business, they tend oftentimes to be kind of bad surprises. So that is what I would say on people who bring up the commodities and precious metal type arguments. So with inflation, for me at least, it's really kind of an interesting one. I mean, we often talk about these big macroeconomic events as they always make headline news, whether it's inflation, short periods of deflation when we do get that, low interest rates, high interest rates, all of that stuff, obviously catches a lot of attention because it does have a very, tangible effect on how business values work and how, stock markets may react and so on. But it's kind of comforting to me that the answer to all of those problems pretty much always seems to be just go back to first principles and buy good businesses at reasonable prices. And inflation seems to be kind of no different in the eyes of the greatest to ever do it, Warren Buffett. So I do hope you enjoyed this video. Your thoughts on inflation and how you may or may not be kind of prepping for it in your portfolio. I really have no major view on whether I think inflation is very likely or unlikely and whether it'll get crazier from here or calm down. But I am kind of thinking through these things in my head and making sure that I'm prepared for anything that may materialize. So like I say, I do hope you enjoyed this video. That's it from me, and I will see you in the next one. Cheers.